The Indian e-retail market is now much more than $60 billion. Private consumption in India has slowed down. E-commerce can actually spur private consumption.
The government of India early on allowed a lot of foreign investment, which actually brought in not only the capital, but the know-how and the technology.
If we are going to see flip-flops on a policy basis, we will end up getting discounted on that front. And if we see consistency, we end up getting a premium.
How many times do I find a small shop in India and then wish I could reorder that product in Geneva or Washington or San Francisco? And the answer is you can't, but you should be able to, right?
SMEs are roughly about a third of the GDP and close to about half the exports. Digitization, formalization, and financialization. These to me are parallel steps.
If there is a staggered pathway to greater liberalization of the e-commerce ecosystem in India, what does that look like? Hi, what should India do to unleash and open up further its e-commerce market and marketplaces? How should we be approaching the prescription for this policy playbook? We've been talking about this theme broadly for several episodes now, but let's focus now on the policy side more specifically and what the e-commerce industry needs to do, not just the players, but the government and those who frame policy as well. So the background is something that we've already touched upon or will touch upon. The Indian e-retail market is now much more than $60 billion, which it was supposed to be last year. And the contrast, of course, is that private consumption in India has slowed down. But one of the points that's being brought up and fairly often is whether the growth of e-commerce can actually spur private consumption. And there is a lot of interesting details on how that can be done. And we've talked about that in previous episodes as well. So today we are going to talk about the policy playbook, and I've got two guests. One is Jay Gullish of the USIBC, and we've also got Ashish Fafadia of Blume Ventures. Jay, let me start with you. So when we talk about policy and policy intervention as a way to grow e-commerce from where it is today, what comes to mind?
Well, obviously, it's just the rapid growth of the Indian market. And we've seen how Indian consumers have not only taken to e-commerce, but really learned to love it and innovate all of the different applications. That's kind of first and foremost. From a policy point of view, the government of India early on allowed a lot of foreign investment, which actually brought in not only the capital, but the know-how and the technology to develop these systems. And it's not just the online piece. One of the major facets is kind of what happens underneath the hood, so to speak. It's not only the initial delivery, but how some of that material clears customs if it's imported or exported, and then how it's returned is also a major factor of it. And to round it out is the payment of those sorts of things, and to ensure that there's not fraud in the network overall. And as I think we all know here, India 2016 issued a press note 3 that really defined this market. But what India did differently is they segmented it between sort of the consumer-facing market, B2C, and the inventory-based market. They allowed differential foreign investment. In that sense, foreign companies are not allowed to hold inventory in India. I think everybody understands why that happened initially, but as the market matures, I think the realization that maybe there's opportunities to change Press Note 3 to allow foreign investment into the inventory-based market. I mean, there's a couple of rationales for that. One, it's just blatantly unfair to treat foreign companies different than domestic companies. And likewise, when Indian companies are in international markets, they want to be treated as domestic markets as well. So there's just an issue of fairness and reciprocity as Indian e-commerce seek to go into international markets, that companies should all be treated equally under the law. The second thing that I think a lot of people miss is as the market in India maybe slows down or saturates and whatnot, there's a whole export of e-commerce, international markets, and how those markets can be tapped by Indian products. Anyone who's anywhere in the world knows there's an Indian diaspora, but also Indian cultural products have a lot of cachet. So how does India capture that demand? And that demand could be benefited by inventory-based markets. Obviously, the direct-to-market folks have advertising, and they can be on platforms and whatnot. But the inventory types, they bring in a different scale. They bring in international marketing capabilities. They bring logistics infrastructure. They bring in custom support. And therefore, for those couple of reasons, perhaps it's time now to kind of rethink this Press Note 3. We understand there needs to be protections for Indian producers and online marketeers, but I think we can find the right balance there ultimately.
Got it. Okay. Ashish, do you want to pick up from there?
Yeah. So, over the last 15, 20 years, India has gone ahead and prioritized a fair bit of competitive plurality over a winner take all kind of a dominance. And that initially did bring in a fair bit of FDI, like Jay said. At the same time, when you look at the structural framework, the way it exists today in the market, we do allow for a fair bit of scale, but not as much control. And when I say control, what I mean is that foreign investors, players on the business side, can only control so much of what impacts them. And what India have done well in terms of attracting the FDI and creating the overall infrastructure to be able to facilitate business both digital and offline, we need to continue the momentum. The other thing, what is going to be important from here on, if I may add as a way forward, is that there is going to be a certain premium that the markets or the investors will factor in or discount depending on how we shape the market regulatorily. So, if the regulators are going to drive a certain amount of comfort in terms of the fact that the infra and the environment that exists today is going to be staying consistent, I think we definitely end up being in a much better state. And it is a little bit of a binary game there. If we are going to see flip flops on a policy basis, we will end up getting discounted on that front. And if we see consistency, we end up getting a premium. So it is not never a steady state. You get the benefits of a consistent regime and a directive which stays consistent for visible for foreseeable future, both by the enterprise and the investors. And it ends up getting penalized with people discounting if there are too many flip flops. And going ahead, we definitely will need a lot more of capital in certain sectors. And our growth has been a hybrid of domestic capital, which is both equity and debt, and foreign capital primarily in the form of equity. And we need to find ways and means to do that. A structural example: 75% of the companies in the Indian listed exchanges are market cap of $300 million or below. We definitely have a massive number of companies and volumes which are listed. We need to find institutional ways of driving the SME growth in a more structural fashion to be able to tap the hidden potential of the SMEs in the country.
Right. Okay. So, can you illustrate that? And I take your point that if you want more capital coming into the country, you need policy clarity and policy visibility. But when you say that we've benefited when we've had consistency and not when we've seen a flip flop, were there any specific areas that came to mind?
No, when I was referring to flip flops, these are referred to the ability or consistency is the ability of the investor coming in and believing that I'm here. The time of entry and the time of exit for me as an investor, the policies are roughly going to be the same. So today, it is important to directionally drive home the messaging that we have restrictions, and the restrictions are structural. They are there for a reason. So I'm not going to try and say that, oh, we need to just go ahead and en masse remove all the restrictions. There is a certain view that the government has held that we need to protect the retailer on the street, and the SME needs to be afforded a little bit of protection. But the whole plurality of competitiveness that we have harbored as a market needs to be more consistently driven as a message by way of a reassurance that what you see today is going to be the landscape for the next 10 years. What changes we have had to make in terms of whether it's a more recent example of Press Note 3, where we have started to be a lot more open to it, is the way going forward. And unless there is a misbehavior of a gross nature from a market or manipulations, we are not going to change things.
Let's pick up on that point about small and medium enterprises, who we can obviously encourage through growth of market and maybe capital infusion as they become bigger. And on the other hand, the desire to create a sense of protection from policymakers. So, are these two sort of parallel paths? Are they clashing? Are they exclusive? And let me begin with you, Jay, because that clearly is one of the issues that we have to kind of unravel here.
Well, thank you for that. I do want to kind of go back to your previous question. One of the issues of consistency and transparency, I think India's data privacy rules are a fantastic example of that. It took almost 10 years to get to a really solid place. But in that decade, there was a lot of back and forth, a lot of consternation. It actually undermined, I think, a lot of excitement and potential investments in India. We got to the right place in the end, but it took a really long time and it was really difficult to get there. And there were a number of sleepless nights that I know that a lot of executives had in the interim. But to come back to your question about about small and medium sized businesses, I kind of talk about this in the creative and innovative economy, right? We always think about e-commerce as big business, but it's actually small business. Online actually allows the person in the garden or the garage to actually create products and tap a global market where they would not be able to do previously. One of the really interesting things that I spend a lot of time in India, and I'm also, in Europe and live in the United States, is the e-commerce markets are very different in India than in the rest of the world. And there are different players, there's different structures, there's just a different look and feel to it. There's absolutely a different pace to it as well. And in that sense, I think if you're talking about consumer benefit, because that's really when you get to the core of all of this policy, we should be talking about what benefits the consumers and people in the India in general, right? And there's very different markets in how they're structured. And there's a lot of companies globally that are not in India, not just the big obvious platforms, but those smaller and more targeted platforms and the innovators and creators around the world. But there's also not a lot of Indian companies on these international platforms as well. So I think when we're talking about policy, I would look at how do you actually unleash India's potential here. There's so much innovation, so much creativity, so much culture that can be sold online easily to global markets. That's actually should be the objective there. And I think you go to India, there's incredible hustle and entrepreneurship, right? These small businesses, of course, there's going to be change, but they're going to figure it out. How many times do I find a small shop in India and then wish I could reorder that product in Geneva or Washington or San Francisco? And the answer is you can't, but you should be able to, right? And there's a lot of tools and techniques there. There's some interesting ideas I don't want to throw out here and now, but around digital public infrastructure, inventories of different products and QR codes that could actually enable a lot of this that people aren't really thinking about it. Instead, we're talking about more traditional types of regulation and market protections and things of that nature. One thing that does happen in India that doesn't happen elsewhere is a lot of sector regulation. In other parts of the world, in the United States, something like competition law covers a lot of areas of regulation that in India have both competition law, very competent competition regulators, by the way. But then there's also a countless number of sector regulators, and there's not almost a month that goes by that there's either not a new regulator being set up or one being proposed. And that creates a lot of the uncertainty, a lack of transparency, inconsistency that I think we would like to actually address. So, to kind of conclude, I just think we need to unleash the potential of the Indian marketeer, the shop owner, these small and medium sized enterprises. If they had access to the international market, I think they do very, very well.
Okay, Ashish?
So I'll just take maybe about half a minute max to just bring out a little bit of the context, if I may, in terms of the whole protection context and why we need to shift a certain aspects of our mindset, which has been prevalent for the past 35, 40 years. So when you look at SME per se, we are about roughly about a third of the GDP and close to about half the exports. SMEs are second largest employers, only after agriculture as a industrial sub vertical. And when it comes to GST registrations, is going to show you that it's 130 million GST registrations. Now, when we went down the earlier thought process about trying to get them to be protected, we're trying to protect them from platform monopolies. You were trying to ensure that there is a wider seller participation that happened in e-commerce as well. And as a part of the whole thing, you were trying to make sure that the retailer on the street and the employability of the sector, access, etc., was going to remain. However, we have now reached a point where we need to start thinking about the growth, because in the event of us continuing to focus on resilience only, we are not going to ever come down to focusing on efficiency going forward. I'll just talk about a few examples. At the end of the day, without compromising the employability and the growth opportunity, we are nobody saying that let's start surrendering the turf to a larger player. That's not the structural framework of the country. We need to ensure that we are not making the DNA change in terms of the mix. But at the same time, there are three fundamental areas. Number one, you remain small, you are not going to be able to have certain advancements, certain benefits of a scale. How are our SMEs going to be competitive in terms of the costs? If it is going to contribute and continue to contribute 40-50% of our exports, you are going to win the battle on the back of efficiency from here on, and not just on account of the volume game. And the price is not going to bring down the volume because we're a fragmented lot as an SME. The second thing is about adopting more and more digitization and a very high level of automation. There has been the debate around how AI and digitization stands to impact. There are arguments on both sides, but I would like to make sure that we should look at this debate as to how what happened before 35, 40 years with respect to machines and manufacturing, or with respect to software 25 years ago. Today, that's the same with AI. In a calibrated fashion, if we back ourselves to be able to regulate and manage some of these things better, I do definitely feel that it's a massive opportunity. And the last piece is that in absence of a structured framework to focus on efficiency, we are not solving for the financial service needs of the SME. The credit gap in the SME, the insurance need of the SME in the country are massive. And some of those verticals themselves are going to end up asking for a lot more FDI intervention. For example, small finance banks, they are allowed for a 74% FDI with approval, 51% automated basis. Maybe the fact that some of the SFBs have done well, some of them are knocking on the door for more licenses, it's an opportunity to unlock that bit and unleash them in the market so that we can grow on the back of a hybrid approach.
From a policymaker's point of view, and I do mean, I mean the elected representatives, I mean they tend to think of retailers and kirana stores first, and then maybe SMEs. I mean SMEs are undoubtedly the backbone of India's, particularly manufacturing economy. It obviously also employs most of the workforce. But that's not how the policymaker or the elected representative thinks. How do we address that maybe optical issue? Ashish, let me start with you.
So when we look at the SME, a lot of times people to ignore the fact that it is MSME. At the end of the day, the smallest guy on the street also ends up being like up to. That's a threshold. You use the phrase up to in the definition. So I think I agree with you to the when you make the statement that there is an inherent bias in the minds of the policymaker. There is hardly a debate around it. But at the end of the day, if you're going to solve from the needs of the credit logistics, okay, let's take just these two verticals because these are two big unlocks. If I may just, because you asked for a deeper level detailing, I'm just getting into examples.
Please, yeah.
So you lock the whole thing about logistics. When you talk about the Kirana store, he is still procuring. in India, on an average, people do end up spending roughly about 14 to 16% in the entire logistics value chain. That's roughly about 1/6 of the overall cost at the bare minimum, possibly maybe a little bit closer to 1/5 range as well, right? Which is massive. The global standards around for most mid-market economies are now stabilizing at the 10-12% mark, and there's an opportunity of an unlock there. The government has done a massive benefit by going down the path of UPI rails, which has made sure that the payments are going to be free and the benefits are there to see. That's the other unlock. The financial services, credit. The cost of credit for a Kirana store is today a level which is about 30% higher than what it potentially can be by bringing them into the mainstream. So if you're going to make sure that the small finance banks are going to be able to go out there, you are going to get the larger banks to have SME verticals. They have all of them. The public sector banks does their bit as well. But are they really best equipped? We don't have an MSME centric financial services program which gets implemented and tested at scale other than the small finance bank, which has been a massive opportunity set when it was being put out there. Some have been more successful than the others. There were structural challenges. The government has been very, very receptive, thanks to RBI, in the way they have worked. I'm arguing for that to be taken on to the next level. And if that means capitalization, policy intervention, we're not talking about tax incentives here.
Right. And I think I just want to go back to the growth versus resilience point, Ashish. And I mean, I can see why when you think resilience, you frame one set of policies, and when you think growth, you could frame a completely different set of policies. And that could apply, I mean, to everything. I mean, not just e-commerce. Jay, if I can come back to you. So, and I just want to bring this in early as well. I mean, the key players are, of course, American players at this point, and who would obviously benefit from, and of course, as we are arguing today, though everyone would benefit from a more open policy framework, particularly when it comes to inventory. What's your sense on what's been happening so far? I'm talking about the trade side. And is there anything from that perspective that we should be watching out for or looking out for, or maybe trying to change?
Well, I think in the e-commerce realm, the big issue was this de minimis ruling, which I don't want to get too into the weeds.
Sure.
But for small transactions, it allowed customs-free access. I should say it was not reciprocal, though. It was one way. And so very quickly, one item that might be able to stimulate India's export market would be a negotiated de minimis agreement that would allow products to go both ways, tax free at a certain value. That's one that jumps to mind. The other one, it's actually much higher level right now, and I think even today the world is together at the World Trade Organization ministerial, and there's an e-commerce moratorium, and that allows e-commerce services to move globally without being taxed. There's a philosophical position that the United States has taken with new technology that has actually behooved us really well. There's always a question of why American innovation and technology is ahead, and I think one of the early reasons is to not to tax new technology, to actually let it flow, be very cautious of it, and then if need to, you could always regulate, tighten, and tax as needed, but don't be too presumptive either in competition regulation or in technology regulation, because it's coming and we don't always know what the right responses to the market gaps are. And governments inherently are not going to get those better than the marketplaces or even consumers, and can step in when they need to. So early on, the internet was not taxed at all for 10 years. At least. And so that allowed it to really expand rapidly. And then later on, it became taxed, in a way that brick and mortar were taxed. So the e-commerce moratorium would allow some tax-free movement of digital services. India's got some concerns about the definitions, but I would also say India is a digital services leader everything from R&D and outsourcing to e-commerce exports to the creativity economy. There's a real benefit for India to be a global leader in all of those markets and sectors, and all of them are predicated on e-commerce. So that's something to watch, how that moratorium flows in India's position on it.
Right. And this is for, I mean, a clarification. Does the Supreme Court judgment affect de minimis duties as well into the US?
That would not be a tariff, it would be a customs tax, so it would not be impacted. Not a lawyer, don't give legal advice, but that's my understanding. It's a decision to waive a customs duty for smaller valued packages. Now, look, let's be clear, the change in American policy was probably not targeted towards India. It was targeted to some neighbors to the north, but it certainly impacted a lot of Indian players. And I think it even impacted, I can't speak for them, but I think it impacted how some American platforms were thinking about investing in India. One thing about investment in e-commerce that we often lose or miss is that developing vendors for your network is actually a very expensive proposition. It's customer acquisition, it's customer ownership, it's customer benefit. There's a lot of aspects there. So if you want to drive competition, you have to enable those onboarding of vendors. And a number of smaller platforms have had trouble in India in the past with developing vendor networks, whether it has to do with the payment side, whether it has to do with e-commerce returns, the change in American de minimis policy for a lot of smaller Indian vendors kind of impacted things. So, and that has sort of, I think, changed the way a lot of the mid-tier and smaller platforms think about entering India or not. And I should say it's not just American e-commerce. There's a lot of sizable and innovative e-commerce platforms in Europe and elsewhere in Asia that also haven't really stepped into the Indian market for various and sundry reasons. But that vendor network is really critical, and that's where I think India's actually competitive edge is. There's so much culture, so much creativity, so much interesting product, and a diaspora that desires it. There's not a country or a major city around the world that doesn't have a Kirana, an Indian shop that is importing goods and services. And there's always something missing from that shop. It would be great to be able to tap India's wealth of e-commerce, but not just in the physical goods like food, but how do you bring in some of the cultural products, whether it's things like cutlery or art or clothing, fashion is massive in all of this. That's often overlooked and missed.
Right. Okay. So I have a couple of questions which we can also sort of use to head towards the sum up. So one is, if there is a staggered pathway to greater liberalization of the e-commerce marketplace or the e-commerce ecosystem in India, what does that look like? The second thing is, and Ashish, let me begin with you. You talked about, credit and the importance of providing credit to small retailers or MSMEs, and that being a powerful driving force in itself. So if I were to flip that question slightly and say that if we were to convince a policymaker about the trade-off, say that, okay, here is what you should do to open up the market as integrated with e-commerce, and here is what, if you open up or improve the flow of credit, you could achieve so as to maybe counter the possible, let's say, damage that could be caused or perceived damage that could be caused by the opening up in the e-commerce context that we've been talking about.
So, broadly speaking, if I were to just break this up into the two parts that you mentioned in terms of the opening up dialogue, I think to me it is a little more holistic question on how we are going to do that rather than whether we should do that.
Yeah.
And when I put that statement, what I mean is that when you look at the way the overall flow of regulations and direction has been, there has been a fair bit of communication clarity from the government across various ministries or the bureaucrats who take care of respective divisions within the government, that we are going to make sure that there is going to be a fair bit of assistance or support that is going to be there for the localization. And to the extent you are going to be able to do that, or whatever it takes to be able to do that, we are going to push on all of those. And on the other hand, while they are pushing for it, they are also pushing a lot on account of formalization. So the whole triangulation between the payment architecture and guardrails over the last 10, 12 years, the entire investment made on Jandhan, which has opened more than 500 million accounts, bringing 90+% of the country into the banking net, and the whole process about GST does clearly give a fair bit of confidence that this is now a structural infra which is set. Now it is about using those guardrails to start implementing policy measures and delivering those benefits back to the TG so that the entities are able to go out from being subscale today to becoming a lot more hyperscale. If you are not going to fuel those things, we will remain a limited set of entities growing fairly well, and you then run the risk of being consolidated. Even if you don't, nobody will go and consolidate in a manner which is going to be very, very healthy or beneficial. It is just that you run the risk of being irrelevant and non-competitive. So that argument has not been lost on the regulator, and which is why we are seeing a fair bit of credit guarantee schemes and all that are being implemented.
Yeah.
But what I'm arguing is that there is an opportunity to make it in a combination of startup plus government plus the industry combination. The other piece also is that they brought about certain regulations, which is that anybody dealing with the bottom of the pyramid, the micro end of the retailers and the vendors and MSMEs, industries, has a certain regime on working capital management. You're supposed to make payments in a certain time frame. But once in a while, you hear stories which are opposite. You end up getting discriminated against because people are used to seeing certain lax credit cycle, etc. So that also is about the whole formalization process and availability of credit to bridge the gap rather than to make it tougher in terms of measures for the larger corporates to integrate with the MSA.
Right. So to come back to the pathway point, if we were saying that okay, here are the three steps we can take so as to allow everyone to acclimatize to a freer, let's say, more flat ecosystem, what could that be?
I would say that so what the ideal system is going to take forever. I don't think until we get to a point where we can prove to ourselves that we can create a certain amount of employment purely by way of formalization, which is not the case. You do need the combination of agri, MSME, and the informal sector, which gives a very high thrust on employment. So until that's not going to change, I would like to actually work on measures that will accelerate that rather than to get to the idealistic system, to be brutally transparent and honest about where I'm coming from. And when you take, if you were to accept that position, then the only way is digitization, formalization, and financialization. These to me are parallel steps. You go ahead and get more and more micro ends of the market, which to an example is what the government did by way of ONDC. You give them the tools to be able to be more and more mainstream. And the moment they are in a zone where they feel that they can compete, they can collaborate, they can be formal participants to the overall ecosystem. You have then taken a step further in the direction of allowing a complete utopian free access that the world keeps talking about. And then the second thing is on the back of that, how do you ensure that they can leverage an ONDC platform and grow, which is the financialization process. And then comes the overall infra layer thing, which comes in, which I mentioned a couple of examples, which is removing logistics, bottlenecks, and all that, where you can have immediate measures taken.
Right, and I think you've talked about this earlier as well, and I mean as an extension that the startup ecosystem built the payments, warehousing, and logistics rails, and then they started building scale. But now everything is in place, and really we should be. How could we be thinking about going, to the next step, and how could entrepreneurs focus, let's say, on product differentiation or segmentation? I mean, do you want to add to that before I come to Jay?
No, the only point that I would say is that the infra layer which the startups began with was completed by the government.
Hmm.
UPI was an example of that.
Hmm.
And that ensures that a very significant amount of capital is not lost on account of payment channels. The world over, you spend a fair bit on account of payments, etc. So that's what I was referring to. The combination of partnership between startups and the government was what got in. The government's actually finished the unfinished agenda that the startups began with in terms of the infra. Now startups are building on top of it, is what I was highlighting.
Got it.
Credit is the next step, is what I went to finish.
Right. And this is something Jay brought up as well, which is on fraud and essentially system integrity. So, I mean, it's a combination of self-regulation and regulation. So, is that something that we should be thinking of in this transition or a hopeful transition to the ideal marketplace?
Absolutely. Counterfeit, fraud, leakages, all of them are evil in the context of the ecosystem that we are talking about.
Yeah.
Just to put in perspective, we have a massive industry, which is like a parallel industry on counterfeit. When it comes to frauds, with the penetration of technology, the way it is growing, it's only going to increase. So, but however, what I'm very, very hopeful is there is a fair bit of light at the end of the tunnel. Last 5 years, unfortunately, I had to say this thanks to COVID. It's not a great statement to make, but the financial services ecosystem, particularly the banks, have adopted to technology a lot more than they did in the first 20 years prior to COVID. And that whole process about layering and embedding more and more technology in various layers has actually ensured that you are in a much better position to avoid. We are not going to be able to eliminate those. Can we allow the scale to be 5x from here on and just half the rate at which these bad behavior is happening? Can we put a lot more onus on the participants who are facilitating settlements rather than say that customer loses, he complains, he has to prove that there is a fraud? Some countries in the world have started to do that. In India, if I lose money on the way of transferring to you, it's loss for one of the two of us, or probably both. Can we make sure that the RBI moves around to a system where it forces the banks to say that no, it's one of the banks who goofed up, so you are liable? I think that's underway. So that's happened. There are conversations around it, and I do believe that we're on the right track.
Wonderful. Jay, 2 points. So one is, you talked about other markets and you've seen other markets. So what is it that we can take away from those markets who may have addressed or faced similar concerns in this transition to more open marketplaces? That's one. And secondly, how does that path, if it's staggered in a way that allows everyone to, find their feet, look like?
Thank you. That's a great question. One thing the United States does really well is it really leans into innovation via light touch, sort of lets the technology evolve, lets people sort of understand it, lets the culture and overall commerce kind of figure itself out, and then sort of steps in. So, and the way we often regulate is on principle based approaches and thinking about risk and really trying to think about light touch, but also periodically be willing to go and systematically cut regulations that no longer are appropriate. Those are some of the few, I think, takeaways that India can learn from the United States. I think Singapore is also a great example. They take a very seasoned, mature approach to promoting new policies, whether it's data flows or cybersecurity or privacy, and they think about it very coherently, starting with things like principles and moving to guidelines and going to checklists. And then only as the market becomes really mature, do you start looking at things like standards and how you might assess those standards self internally or if needed to have some sort of audit or compliance. And I think one of the lessons I think from Europe that we can learn is the European Union. While there are a lot of policy issues that emerge from the way they think about things, they do allow some commonality across many different countries. We often think of the EU as a country; it's not. And so it actually does make it easier to do business in the continent holistically through some sort of commonalities or standards or consistencies or reducing barriers. And so those are a couple of examples that I think India can take in. What I would suggest if somebody were to ask me is the e-commerce market is currently being regulated in a way that policymakers think of it as sort of an immature, a new technology when it actually has been around for a long time. I think there needs to be a holistic approach, top to bottom review of what has worked, what has not worked, and I think the objectives should be principle based. Look, if there's a problem with regulation down in the weeds, you go to the government of India, typically they'll respond and get it fixed over a period of time. But this holistic view of what works and what doesn't, and maybe how the objectives have fundamentally changed now that there is a fair amount of infrastructure, cultural understanding, and then actually just create opportunities for what we've been talking about, kind of going forward, because there's a whole new wave of creativity and innovation coming down the pipeline. Social commerce, AI driven retail, live shopping. These are all starting to be things that are happening. And yet India is still thinking about, how to protect the Corona from an inventory based, platform, right? So there's a lot of things that I think need to be rethought. And rather than doing a piecemeal, I think a holistic review. The final thing I would say is I always like to say e-commerce is just commerce. It's just online and everything's online now. There really isn't always a need to look at markets separately and independently as India often does. You have some baseline structures, whether it's consumer protection or competition or fraud management, that actually impact all aspects of the economy and don't necessarily need to be thought of in this sector and that sector. And that creates this almost matrix regulatory and compliance burden that is confounding to a lot of Indians, but also international investors. And all of that compounding of regulation takes time, energy, money. It reduces margin. It creates headaches. It's the rolling eye syndrome that when something pops up unexpected, and it really impacts how people do think about India. And what I often say is, I'd rather make money in Switzerland than lose money in India. And what I mean by that is, and I've said this many, many years, is it's all about the margin. It's all about simplicity. It's about ease of doing business, about ease of investment decisions, right? And so while India has huge promise, there's huge complexity there. And so anything that can be done to simplify that. Obviously, India is never going to be Switzerland. It's too big, too diverse, but kind of find that middle ground, I think would be very helpful. And finally, I think there needs to be a way to encourage people to get online. There's to how to tap the fashionista that is doing something, and we see a lot of this in sort of the social comments. So how do you incent that? Is it through cultural pushes? Is it taxation? Is it lower regulation? And I think the answer is yes to all above, and to kind of integrate that into a rethink about how India wants to think about e-commerce in the next decade.
Right, that's a wonderful note to end on. And both Jay as well as Ashish, thank you so much for joining me today and walking through the policy framework and the pathway forward to bring about a more freer and more fun marketplace for everyone. Thank you.
Thank you both. Appreciate it.
This series is supported by Flipkart.